All right, so we're going to look at the market from two different perspectives, one from MarketClub and then two the manual way. So we're going to look at the same thing, but from two different viewpoints. I'm going to show you what I'm looking at here. So let me pull up MarketClub first. And if anybody doesn't know, I've got a lot of questions this week. MarketClub is recently they partnered with me and they asked could they host my training on their platform. So it's a software company. They offer software that teaches you like entry and exit signals. So like these trade triangles, they call them the trade triangle technology. So Adam is a former floor trader, so he factored in, he could see when the big money is getting in and getting out of stocks based on his knowledge. So they create this software that kind of pinpoint and show you when big money investors are getting in and out of stocks, and that way it would move stocks and you can kind of get in and get out. So they have been asking me for years to host my training, and I was like, nah, because I found a way to use this with options, and no one had ever done that before. So it took them a long time, or it took me a long time to finally say yeah, but they finally, if you look up here, I finally said yes, and so they now host my SemiAutomation Blueprint training there. That's not the 10-minute template. The 10-minute template is more of an exercise, but the SemiAutomation Blueprint is the full training on how to use MarketClub, with options. And so I don't know if you've ever seen emails about that. I think it's a couple of $100 to enroll. I'm not saying you should enroll, but I'm just letting you know because I got a couple of questions about that. So if that's something that interests you, you can enroll in MarketClub. It's pretty cool, actually. On a year-to-year basis, I've never lost money using that template with MarketClub because their signals are just too accurate. I mean, you can clearly look here, and this is the Dow. Like lately, all right. So let's look here. Like entry is green, exit, entry, exit. So some of them might be break even, like this entry and this exit. It might be break even. You might not make any money, but you've made money on these previous trade triangles. And this is one that's not doing so great lately. Like the trade triangles haven't worked out. When other stocks like SPY, you can look how this one works better with the trade triangles, meaning that you would have made more money with that. They also created something called top options, which is really, really cool in my opinion because it saved me at least an hour of time because I used to manually go through all the stocks in their system and try to find candidates. But they took what I teach in the blueprint, like the criteria for picking stocks, and they have it all here. So they've done all the work for us. And so literally we come here and all these stocks satisfy that template. And then we can just kind of pick and choose which stocks we want to trade based on the criteria in that template. So anyway, what I want to do is show you the general market from MarketClub's perspective, and then I'm going to pull up my stock chart and show you from a manual perspective. I always tell students you still should learn. It's like a calculator. Calculators, I use my calculator to add and subtract all the time, but I still know how to do it manually. What if, I don't think this is going to happen, but what if calculators went away one day? That technology went away. You'll find that in companies, the technology goes away, and the newer graduates, college graduates, don't know what to do because they learn how to do stuff with technology. They learn how to add and subtract with calculators. They literally don't know how to do it manually. So I always tell people, yeah, the technology like MarketClub's trade triangles, it is great. I use it. It's a tool in my toolbox. But I still know how to trade manually and suggest other people learn. What if Adam wants to retire one day? Who knows? What if they decide, hey, we've been in business 30 plus years, we're shutting our doors, blah, blah, blah. You don't want to be handicapped. You want to be able to have something to revert back to. So that's why I'm going to teach you both the manual. I'm going to show you both tonight, the manual plus the mechanical semi-automated way. So with MarketClub, we're looking at these monthly trade triangles here. They are long-term signals, okay? Then they have something called a trend score. The trend score tells you the weakness or the strength of the stock. So this negative 100 means it's in a downtrend. And if we were to pull up like a trend line and kind of draw, we can see that prices have angled down here. And so that's what that trend score is telling us. Now, it also gave a red monthly. Monthlies are generally longer term signals. You don't usually see this many on the chart. This is a lot back to back. Case in point, when we look at S&P, now we're looking at the S&P 500. You can see 1, 2, 3, 4, only 4 in a 2-year time period, only 4 monthly trade triangles. If we were to pull up a stock, you might see 1, maybe 2 trade triangles in a 2-year time period. because they're longer term signals, meaning that in the long term, in the next 2 to 3 months, what is the stock most likely going to do? But the Dow here has a lot. And when I see that, I get cautious. I get worried. And I'm like, you know what? This is not good. It's what I consider like toppy behavior. You know, if we look up the S&P 500 10-year, a 10-year chart, and we look back to the top of the last bull market, you sometimes see toppy behavior. Like you hit all-time new highs, pulls back, has trouble going, goes up again and has trouble moving forward, and then eventually it crashes in price. So that's what I kind of consider toppy behavior. It's just an inability to move higher. And so looking at the Dow, you kind of see all these monthlies. And like I said, they don't usually come that often. So that always has me worried. And it's been pretty much sideways or slightly down. And we just triggered for another monthly. So I can't trade call options with that template. I am out. Technically, I could look for put options. I generally only trade put options in a bear market, though. But you can use the good thing about the MarketClub, the SemiAutomation template, is you can trade put options a little bit quicker than with any other template, because MarketClub will get you in really early. So what I'm waiting for are these two numbers right here for the S&P and NASDAQ to get to about -85, -90, and then I'll start looking for a couple of put options. And I actually, in that training, I actually walked through a case study where I traded put options using this template. The thing is, though, I have to remember that we are in a bull market. This is a 5-year chart now in the Dow. We've been going up for 5 years. We're still in a bull market. So if I trade put options, I got to be in and out really quick. Just take my profits really quickly and wait and sit on the sidelines and kind of wait, because I don't know if this is the beginning of a market crash or not, but I am a little cautious. And when I show you the manual way, I will tell you that it does look like the market is turning over and about to fall. How far, I don't know. Okay, so that's the Dow. S&P has triggered. It hasn't triggered for a monthly, but it has triggered for a weekly, but it's triggered for a bunch of weeklies. So we can see it hasn't triggered for the monthly, the long-term downtrend here, but it has triggered for a bunch of weeklies, and that's normal. The S&P has gone sideways pretty much for the whole year, so this is normal to see this. It just means stagnation. And even if it triggers for a monthly, what I have to be cautious about, because remember, we're still in the bull market. Last time they triggered for monthlies, what happened? It went down for a little bit, and then it reversed. So that's what you have to be cautious about, is when you trade put options in bear markets. You can't. I received an email just the other day, and this person was convinced that we're going to head into like Armageddon, like this huge market crash. And I said, well, you have to, trade what you see, not what you think you're going to see. Well, I didn't say that. Well, I said, this is how I trade, because I've seen somebody lose their entire life savings because they were convinced that the market was going to crash. So they bought a bunch of put options. Well, we've been in a bull market for 5 years. And, I think as John Maynard Keynes said, the market can stay irrational longer than you can stay solvent, meaning that he ran out of money before his prediction came true. 65 years old, lost his entire life savings. That's what happens when you become convinced in your mind as to what you think the market is going to do. And the market honestly doesn't care. So if we see this, we get excited, we buy a bunch of put options because we're like, yeah, it's it. This market crash is finally happening. Well, the market finally went back up. That's why it's really important to trade what you see and listen to the story the stock is telling you. Don't argue with the stock market. You'll be proven wrong every single time. So even if we get triggered for monthly, what I have to be careful of is, getting in and then the market reverses on me. So that's why if I buy a put option, I'm only going to buy maybe one or two, $50 to $100 risk, not that much. Okay, I won't look at the NASDAQ because I want to move on to the manual method real quick. So I'm going to pull up a 2-year chart here. I'm going to show you something I noticed the other day. This is something I've been doing for the last 2 years. I've been drawing an ascending line of support up under prices here. So I'll start down here because we can see that for the last 2 years here, the S&P has gone up, okay? And it's gone up predictably, and it's pulled back. The stock market doesn't just go up or down. It has a zigzag motion. And so even though it's gone up, it's had these pullbacks, but every time it pulled back, it did pull back most of the time around this price level here. So I've been drawing this 2-year trend line to kind of see what pullback I need to be concerned with. And so the last pullback I needed to be concerned with was back here towards the end of 2014. And it pulled back pretty heavy here. And people thought there was a market crash. And I'm like, well, no, there's not a market crash. And I'll show you. Let me ask you this. If I told you there were 4 stages to a market crash, and what stage would you be concerned at? Would you start getting worried at stage 1, stage 2, stage 3? So this pullback here was only like stage 2. We didn't even really get to stage 3. So when you have systems like that, you don't really have to be concerned. You don't have to fear. So when this pullback happened, it was pretty severe. People were getting freaked out, but I'm like, well, no, we're only at stage 2 right now. There's no need to be concerned. When we get to 3, that's when I start getting a little worried. By the time you get to 4, yeah, it's time to start loading up on put options and things like that. Okay. So right now we're only in stage 1. But what I noticed is that prices have, in fact, crossed down through the 2-year ascending line I've been drawing. And then, remember how from the basic course, support and resistance. Okay. This was support. It crossed down, prices crossed down through it, and this line then becomes resistance. So during the last pullback here, and let me draw a circle here so you see where I'm at. So during the last pullback here, prices went up to resistance. They kind of, pulled back a little bit, but they broke through resistance. So resistance did not hold, and prices, eventually resumed and went higher. Okay. So what we see here is prices have came down. They tested resistance. Resistance held. Now they're falling higher. So that's what I noticed when I see them. Like, wow, stocks pulled back. They tested resistance. Resistance held. They didn't go higher. Now prices have fallen. So I'm like, yeah, based on this, I anticipate the market falling in the next few days to a week based on this. Now, how long it falls, I really don't know. But just seeing this, I'm like, yeah, I'm definitely not opening any more positions. I'm staying in my current positions until I get exit signals, and then I'll get out. But I'm not going to exit based on fear. Neither should you exit based on fear. All right. So seeing what the market is doing lately, and even if we pull up the template here, we can now pull back on open, high, low, close bars. 200 is still pointing up, so technically we're still in the bull market, but prices now have crossed, moving averages crossed down, all that, and prices are now about to touch the 200-day moving average, and they have not done that. Well, they've only done that once in the last 2 years, and that's that last pullback I was just showing you. They did actually cross down through the 200 pricing level. And you don't see that often. Like I said, this is a 2-year chart. That's only happened once in the last 2 years. Prices usually don't pull back that heavy, but the market has been going up for a while, so it's to be expected. So now we have a 5-year daily chart, and we can see since 2012, prices have touched the 200 1, 2, 3 times. Okay, so in the last 3 to 4 years, well, 3 years, market's only done that, 3 times, so once every year. All right, so about due for another correction, mini correction. So this is nothing to get worried about. It's about time for another, what they always call 5 to 10% correction. From there, only 1 or 2 things will happen. The market will just go back up, or it will keep going back down. So now let me show you what I meant by the stages of a bear market. This is something that's taught in the Success Academy. I taught it to Success Academy members kind of as a preview for something I call the Bear Market Blueprint. Whenever we have a market crash, don't stress out, don't get worried, because I'm going to walk you through it, show you exactly which trades I'm doing, all that. Thus far, since I've been teaching this to groups, I haven't walked anybody through a bear market. So I'm actually looking forward to walking every single one of my students through a bear market. And I'm going to do it through something I'll call a Bear Market Blueprint. Now, part of the Bear Market Blueprint, I teach those members the 4 stages of a market crash. So if you're part of this, well, if you ever join the Success Academy, you'll get that full training. And I think I may have a handout I can give you a little bit later. But no, matter of fact, don't worry about it. If we ever cross those stages, I'll start walking you through it. So I don't want you to stress. I don't want you to focus on something that's not here right now. So if we ever have that, I'll start walking you through that training. So just keep that in mind, though. So mainly, there's nothing to be worried about right now. It's literally just a normal pullback. It's what I call a transition period. As a matter of fact, it's a transition period. I haven't talked about this in a while because we haven't really hit a transition period in a while. All right, pulling back up that moving average here. A transition period is where prices are transitioning from one trend to another. So we're transitioning from an uptrend now to a downtrend. You see that through the moving average crossover there. You also see that through MarketClub, like on the Dow, the monthly trade triangle. It's a transition period. Market's transitioning from up to down. Okay. Now during a transition period, you will generally lose money. Okay. You will generally lose money during a transition period. It's just a fact of life. Now, how much money you lose depends on how many trades you're in. So if you're in, the more trades you're, essentially the more trades you're in, the more you'll lose money. And so I got caught in this transition period. I was in a little bit more trades than I usually would like to be in. So I started losing a little bit more money during this transition period. Currently, luckily, I'm still up for the year, but not much, maybe 2%, which I'm not too happy about, but I am beating the S&P, which is my goal every year, is just to beat the general market. But I'm not happy that I lost a little bit of money during this transition period because I honestly, wasn't expecting this. But, we trade what we see.